We got to bring in here somebody who made us something about this, former Fed Vice Chair Roger Ferguson. He is the former president and CEO of TIAA and now Vice Chair of the Business Council and a CNBC contributor. Lots of titles, Roger, because there's lots of wisdom there. That's why.
You're absolutely right, Steve.
I want to get to the about face the market did with what happened last week. I was reporting one hawkish Fed president after another. The market was going down in terms of the probabilities. And then John Williams said two words, near term, and everything turned around. Was this the right call by the market, you think? Do you think John is out there? I call it the intellectual pulling guard for the chair?
Look, that's certainly the way the market perceived it. To be fair, I share some of your concern that one speech suddenly changes the outlook and the view that the markets have. No doubt that John personally is very close to Chair Powell. More importantly, the role as vice chairman of the FOMC, which sits with the New York Fed, comes into play here. But I think the market is reflecting what it heard, and we'll see if that's the right call. I actually think it puts the Fed in sort of a tough bind now, because there are many folks who I think are not ready to make the move. But on the other hand, now the Fed risks, if you want to use that phrase, disappointing the market. So, I think it's become a bit more of a conundrum than one would have liked.
Right. So they took away the flexibility. But, Roger, I was sort of on board with some of these folks who were saying, hey, 4.5 years going on 5 years of being above target. The economy doesn't look that bad. It's time to start to address the inflation issue. But then they seem to be backing off of this. Where would you stand in this question?
I'm very much with you. Inflation has been running not just somewhat above target, but call it 2.9, maybe 3%. It doesn't round down to 2. A lot of the factors that have been driving that you've been talking about, some of them may ease. Housing may ease over time, but that's a serious structural problem. I think the argument for the labor market being dramatically weak so as to needing monetary policy assistance, to me, is not that strong. So I'm very much with you and with those who would be much more cautious about this December move.
There's a hear no evil, see no evil aspect to this, Roger, in the sense that we have a lot of private sector data on the job market, and we can sort of see that data getting weaker. We don't have good data when it comes to inflation in terms of what's happening out there. And so I think the feeling was, I'm watching this jobs data get weaker. And as far as I know, the inflation data is okay. Do you think that they're siding on the right risk here?
I do not. I hate to be so overly critical of friends and former colleagues, but my view is the risk here on the inflation side, and most importantly, on maintaining short-term credibility around inflation, should not be ignored. I think there's a whisper in the market that maybe the actual inflation target is somewhere around 2.5, maybe 3. I don't think that's what they want in the marketplace. So if I were a voting member, which I am not and have not been for a period of time, I would be in the hold camp for now. And if I can say one more thing, President Goolsbee from Chicago some time ago said something I found very insightful, as he often does, which is, in the absence of knowing what the inflation data are, it's a lot harder to get that genie back in the bottle. And so maybe you err on caution because you don't have information giving confirmation about inflation coming down.
All right. Well, Roger, real quick, would you delay the meeting for the data?
No, I would not. Becky,
I think you're wrong.
You're wrong.
You may think I'm wrong.
Go ahead.
No, I know you think I'm wrong. That's fine.
Answer the question. Sorry.
Look, I've been thinking about this a bit since you posed the question a little while ago. My initial answer, I think, is still true, which is you don't want to be in a place where you seem to be whipsawed by, let's wait for the next piece of data. If you start doing that, then you're going to open up a whole new question, which is, should we keep to the original meeting schedule? And, you can have a debate almost every meeting that some new piece of information is going to come in.